This is the moment we've been waiting for. Three-stock lunch. We're tracking some of the big movers of the day. Alphabet, higher on news that it is laying off about 6% of its global workforce, about 12,000 employees. Wayfair also announcing job cuts to about 10% of its staff as part of cost-saving plans. And SVB Financial, higher despite reporting a fourth-quarter miss and rising operating costs. Here to trade us is, or trade them. I hope I'm not getting traded here. Ava Ados, she's Chief Investment Strategist at ER Shares. Ava, it's great to talk to you. Let's start with Alphabet here. What do you make of the layoffs and how it affects your view of the stock?
Well, actually, we're even more optimistic now. It's actually one of our favorite mega cap stocks, if not the favorite, especially from a valuation perspective. When it comes to their enterprise value, to their future revenues, that's 1/2 to 1/3 of its peer. It's also one of the few companies in the tech category which is primarily focused on the bottom line. So we see their net income margin at 10 times its peers. And in fact, we see their profits that have doubled in the last 2 years, and their revenue growth is well above their peers. This action today with cost cutting is also drives home the fact that they're cutting costs, they're maintaining and keeping their margins constant, if not increasing them. So we're especially optimistic for them. It's a buy.
Let's move on to number 2, which is Wayfair. It's laying off workers, too. It doesn't want to be left out here. 1,750 workers. What do you think?
Another buy. I think their earnings today is a good signal for their viability and their future growth. Let's not forget that with COVID, darling, the revenues went up 50% during the COVID era, and as a result, their SG&A skyrocketed, and so they now have an imbalance. Their SG&A costs are 50% above pre-COVID levels, while their revenues are only 30% above pre-COVID levels. So what they're doing now is they're recalibrating, they're resetting that balance, and so together with their prior cost-cutting announcement this summer, they're cutting $1.5 billion in costs. That will take them well past break even. They're on their way to profitability. That's the key news today for Wayfair.
All right, the final name is SVB Financial. It missed on earnings. How's it positioned for the long term?
That's a hold. I like the fact that in a tough era for tech stocks in the last couple of years, when VCs and private equity firms scaled back on their investments when it came to tech, especially Silicon Valley filled in that vacuum, so they benefited opportunistically, and so that's reflected today on their margins, on their earnings announcements. And so the reason why it's a hold and not a buy is that they're up 26% year to date. So a lot of optimism, a lot of the upside potential has already been realized, and their PE ratio is 50% above their peers. So I would encourage investors in the future to add to their positions in soft days. However, it's just a hold for now.
Look at that price performance there, up 15%. Ava Ados, thank you so much for joining us today and giving us your perspective.